Okay, so let's get started with today's webinar. In today's webinar, we are going to be looking at support resistance. Today is day 2 of the 3-day price action blitz. The 3-day price action blitz is a 3-day series of webinars. Yesterday was day 1. We discussed candlestick analysis. Today we're going to do support resistance. And tomorrow we're going to put all of them together and we're going to look at how to actually trade reversals. Now, I done one of these webinars at the start of the year, a kind of 3-day blitz webinar, but things in my strategy have changed a bit. And with those changes, I thought it'd be best to do another webinar series. That way you guys can be up to date. The changes aren't major, but there are some changes, and I guess they're somewhat significant. So we're going to be looking at those changes today. And most of the pretty much all of the changes are to support resistance areas. So if you're familiar with how I do support resistance areas, you may notice some slight changes with what we look at today. Have I resized support resistance areas? Nope, definitely not. I'm not sure what you mean by resized. What do you mean by resized? Oh, yes. Well, a little bit of that, but there's also some other changes. But Ivo brings up a good point. Have I resized my support resistance areas according to volatility? Yeah, that is definitely one thing. Support resistance areas have spread out more. Now, I've recently we went through a period of extreme low volatility in Forex, and that low volatility had a significant impact in the way I trade. At first, I was taking less trades until I changed up how I do support resistance areas. And with that change, it became a lot easier to find and take trades. Um, oh no, that's not what I mean. No, that's not what I mean by resizing. 10 pip, 10 pips to either side is the same. That doesn't really change. I mean, there's more distance between two different support resistance areas, but I'll show you in a second what I mean. Volatility, or just kind of movement, you can kind of see the difference just by looking at this daily GBPUSD chart. You can see this period in June, the average size of these candles. So if you look at these candles and you compare them to the average size of these candles, just by looking at them, you can see the difference, right? You can see that these are much smaller on average than these ones. That's a question. You guys can see the difference, right? All right, cool. I just wanted to be sure it wasn't only me that could see the difference. Okay, so um, now these candles, obviously, like you said, you could see the difference, and that kind of shows this change in volatility. We've seen a change on how much price moves on average in a day. Now, this change was very profound around this period, this part of the year. It was very profound. The changes had a huge impact on my trading. And the Forex market is always changing. The volatility is always changing. It's always going up and down, up and down. And mm, actually, I just thought of something. All right, just give me a quick second, guys. I know I'm breaking away from the webinar a little bit. I just want to look up something on the forum. And my webinars, guys, I said this yesterday. My webinars aren't very organized. I just have a subject, I start the webinar and I talk about it. My webinars aren't very polished, aren't very organized. So I am sorry, but you're gonna have to put up with a little disorganization here while I find something that's really cool, if I can find it, which I'm not sure I can. I just want to show you guys something about volatility. It doesn't look like I can find it. What I wanted to show you guys was some volatility charts that show the change in volatility that we've seen in the last few months. We went from a period of extreme low volatility to kind of medium volatility again. And the problem with that is, if we start placing support resistance areas based on this data here, the volatility we have here, the support resistance areas are going to be quite close together. But then, if we go forward to this area here, this volatility, those support resistance areas are going to be way too close together. And, a single candle is going to span between two support resistance areas very easily. So the problem is that I've had to change how I do support resistance areas because I've had to start adapting my support resistance areas. I've had to start moving my support resistance areas much quicker than I used to. Before, I would place a support resistance area on my chart and it could stay the same for a month, 2 months, 3 months. But these days, I update my support resistance areas almost weekly because just the way candles are moving these days, it's just a lot better if you update them weekly. You get a lot more accurate results, you get a lot more trades, and you get a lot less bad trades. It allows you to filter out bad trades. Now, an extreme example of this is you can see by going back to around about 2008. So I'm going to quickly do that before we move on. All right. So I'm putting these two lines in between this candle. This is pretty much one of the biggest candles we've seen on the daily chart in the last few weeks, this candle here. And I'm going to go back to 2008. And I'm going to show you guys something about volatility. Ooh, I went back too far. Right, 2008. So these lines were spanning between the largest candle we've seen in the last few weeks, right? When we go back to 2008, you can see that this candle, that's how big it is. It's tiny. It's like an indecision candle. Back in 2008, the average size of a candle, well, not the average, but let's look at this candle. This is a big daily candle. That is a 1,000 pip move in 1 day on GBPUSD. This is a 600 pip move in 1 day. We don't see movements like that anymore. So what I wanted to illustrate is volatility is constantly changing in Forex. And that's why I've had to change how I do support resistance areas. Is the sound bad for everyone? All right, it sounds like it's just bad for some people, so I'll keep going. So yeah, volatility has affected how I trade, and now I place my support resistance areas. I place them in the same way, except I look at a lot less data than I used to place my support resistance areas, and also I update them weekly. So what I'm going to do today is I'm going to go through some of my support resistance areas. I'm going to place some support resistance areas on GBPUSD, GBPAUD, and then I'm going to ask for a pair from you guys. So I want you guys to suggest a pair to me, and a pair that's suggested more than once. I'll pick, unless it's an obvious pair. I don't want to do Euro USD or AUD USD. See, everyone goes Euro USD. There's already support resistance areas for Euro USD. They're already listed on the website. I'll get you guys a link to my support resistance areas afterwards. Not Euro JPY either. Euro AUD sounds good, but we'll do this the suggestions later. Let's just do support resistance for now on GBPUSD and GBPAUD. Now I've already got support resistance areas for this pair, for both these pairs in fact, so I kind of know where they are. Usually happen. I got no idea what that was. I think my mic cut out, but at the same time everything crashed. I really have no clue what it was, but let's get back into it. I don't want to waste time. So we are back up and running. Sorry about that. Okay, so where were we? We're going to do some support resistance areas. We're going to start with GBPUSD, GBPUSD. Then we're going to do some GBPAUD support resistance. And then, like I said, I'm going to take some suggestions from you guys, and I'll do a pair. Someone mentioned Euro AUD. I think we'll do that one, but I'm up for other suggestions. Yeah, GBPUSD. We'll start with GBPUSD. And like I said, I already have done support resistance areas for GBPUSD. I've done support resistance areas for a lot of pairs and uploaded them to the website. I'll be linking them after this webinar. When I post the recording of this webinar, I'll be adding a link to the support resistance areas. I'll also be sharing a link in the chat in a little bit. So the support resistance areas will be shared. Anyway, so let's get started with placing some support resistance areas. The basic idea of placing support resistance areas, it has changed a little bit. Not a lot, but just a little bit. Before, I used to place support resistance areas based on, maybe this much data, what you see here, and I used to pull my chart back even to 2008, 2009, 2010 to confirm that the support resistance area is in fact active. But these days, I have learned to rely on a lot less data. I don't really feel like I need data going back to 2008 to confirm my support resistance areas. So these days, I place my support resistance areas based pretty much only on what we see here. So the first two are pretty obvious. The reason I'm placing them here is because in the last few days, we've had a lot of bounces from here and here. It looks like price is stuck in this channel. If we pull the chart back just a bit, we're going back already to 2009. August, September 2009. Price was moving differently. Volatility was different back then. So it's really hard to use this data from 2009 because price was moving differently. Now, we do still see back in June 2013. Back in June 2013, we do still see some bounces from this area. I mean, it's quite clear that there was support resistance here back in June 2013, but we can also see that price was moving differently back then. And it makes it a little hard to use the same support resistance areas because if you look here, these support resistance areas are kind of widely spaced apart. But if you go back to, where was it? To here in, yeah, that's June. Okay. You could see that they're a lot closer together. These support resistance areas wouldn't really have been that good back in 2013. So I don't really rely on data from 2013 anymore. I don't really drag my charts back as far as 2013, 2012, or that far back. I just look at what's happened in the past few weeks. I'm mainly basing my support resistance areas on that. Now, in the past few weeks, we do see some bounces from around here. So I am fine with placing my support resistance area here. Generally speaking, I do like to see a little more data than this, but if you don't have the data, you just don't have it, and you can't go back way too far because the market has changed and that data is not really that good anymore. And this is also good because it allows us to place support resistance areas on pairs that are venturing into new territory. There are certain pairs like GBPJPY, for example. GBPJPY is moving into areas that it hasn't really been in properly since 2003. I mean, it has been in those areas in 2009, but it kind of just went through real quick. So using this method of placing support resistance areas, relying on as little data as possible, it allows you to get clearer support resistance in areas where price hasn't gone into in a very, very long time. That is a good question, guys. I should have mentioned that, sorry. I am using the 8-hour charts. 8-hour is best for placing support resistance, in my opinion. The 4-hour is just a little too small. There's a little too much data, but the daily is not really that great for placing support resistance areas that you're using on the smaller time frames. Sometimes on the daily, I'll place separate support resistance areas for daily charts. 8-hour is the best. If you don't have access to 8-hour, you could just get a demo account with MT5, and this is one of the biggest. Zero. By the way, you're typing private to presenter, so only I can see what you're typing. Hit that drop down list above the message box. Oh, you fixed it. Okay, cool. Okay, so where were we? Uh, yeah, 8 hour charts. Um, one thing I don't understand about Forex traders, and I guess I did this for a while too. For some reason, we feel like we need to have our charting platform um, with our broker. We feel that our charting platform and our trading platform needs to be one and the same. But why? Why does it have to be the same? Why can't you have a charting platform and a trading platform? Two separate platforms, one for charting, one for trading. And that allows you to have a full featured charting platform with everything you need in it. And then it allows you to have to go with the best broker because you're no longer making a compromise on the broker you go with because that broker doesn't have MT4, doesn't have the charts you want. You know, you can pick the best broker with the best reviews, with you know, just the best broker, the broker you want, and then you could pick the best charting platform you want, and you can have the best of both worlds. So, guys, stop tying yourself to the idea that you must have a trading platform and a charting platform as the same thing. Just go out and get a different charting platform, and then you'll have access to 8 hour charts. I mean, most modern charting platforms, the good ones, you could do a 37-minute chart, a 39-minute chart. You could just pick whatever interval you want and you can make charts out of those. And, you know, you shouldn't really be trading a 37-minute chart. That's not the point. The point is those options are there, all those features are there. Um, yeah, I know there's some people are mentioning the time frame converter. There is that option too, but it's, you're making MT4 do things that it wasn't made to do. Just get a separate charting platform, guys. If you want 8 hour charts, that's my advice. Just get a separate charting platform. You don't have to chart with your broker. You just don't. There's really no reason to. Um, but anyway, let's continue with the webinar and placing support resistance. We are placing support resistance on 8 hour charts. I prefer placing support resistance on 8 hour charts. 8 hour charts are pretty much the best for support resistance still. Sometimes I'll switch around between 8 hour and 12 hour. But for the most part, I am placing all my support resistance on the 8 hour chart. So let's keep going. I'm gonna place one. Oh, damn it. Accidentally. Okay, that's better. Place one roughly here because it accounts for this bounce here, that bounce there, and also kind of that bounce there. When you place a line, you have to imagine it as an area. Now, if this is an area, then it accounts for this bounce too, because it's not always going to bounce perfectly from the line. If I place one around about here, we got that bounce there, that bounce there, that bounce there. It accounts for the bounces along here. So this is basically what I'm doing. It's a very, very simple process. I just look at my chart, right? And I identify recent bounces, okay? So you just look and you look at these recent bounces, and also you look at when price forms along an area. So when price gets stuck on an area trying to get through it, and I just can't manage to get through it, here's another bounce, relatively minor, but still a bounce. There's another bounce. So that's what I'm looking for. I'm looking for recent bounces. And the most important thing when you're doing support resistance areas, the most important thing, the thing you have to always remember is recent data is the most important. Recent data is what you have to look at. If there was a major bounce here, like this one, you don't place the support resistance area here. The recent data is showing us that this is a much clearer support resistance area. This one here, where we're getting all those bounces. That is what the recent data is showing us. Recent data is always more valuable. You want to go with the recent bounces, not the bounces we had 6 months ago. Recent data, more important. Keep that in mind every time you do support resistance areas. Look for the most recent bounces. So again, for this support resistance area here, I identified it by looking at this bounce, then this bounce here, then that bounce there. Bam, easy. That's how our support resistance area placed. This one was based just on a single bounce. Now, ideally, you don't want to base support resistance areas on just a single bounce, but when you don't have much else to go on, you just place it, and then you kind of filter it out with time. When price moves back up to here, for example, if it just crosses straight through and it bounces from here, from this point, then it comes back down, then it comes back up to this point, and it bounces from there, then we can say, okay, we'll move the support resistance area up to here. But for now, this bounce is pretty significant. It's a pretty big bounce. So for now, the support resistance area is placed here at this bounce. Now, we could also look back a bit, but we don't really have much data until 2013. Yeah, there really is nothing. So with this support resistance area here that I've placed, let's go back. With this one here, we're placing a base just on a single bounce for now. Andy is asking, the distance between each support resistance area is very similar. Is that normal? Yeah, it pretty much is. You tend to find that support resistance areas are pretty evenly spaced for the most part. Yeah, line charts do help determine support resistance areas. By switching to your line charts, it does help with determining support resistance areas. I don't really use it very much, but yeah, it does help. Now, this other support resistance area down here, I'll just show you why I placed this one. You got a bounce there, a bounce there, bounce there, bounce there, and then it's stuck on it here today. And obviously the lower one, again, we got a bounce here, blah, blah, blah. It's pretty straightforward. It's not a tough process. You just look at your chart, you look at areas with a lot of recent bounces, and you place your support resistance areas there. Now, a lot of people are probably thinking, especially with this one here, where we're placing it. That one there is obvious. I'm just going to throw that one up too. But this one here, bam, that. Now, this one, when I look at it, I agree that we're placing it based just on one bounce. So it might not be a very accurate support resistance area, It may not be the best support resistance area. It may not even be a support resistance area. But that doesn't matter. And do you know why that doesn't matter? If you think about it, when price pushes up to here, if we get indecision forming right on top of the support resistance area, if you were here yesterday, you'll know what indecision is. If you get an indecision candle forming right on top of the support resistance area, right? That indecision candle is the confirmation you need to say that this is in fact a support resistance area. You see where I'm getting with this? The fact that indecision is forming right there is the confirmation you need. That is confirmation that it is an accurate support resistance area. If price crosses straight through this area and indecision doesn't form, and that happens again and again, another 2 or 3 times, then you realize that this is not in fact a support resistance area and you adjust it accordingly. But if indecision forms on top of there, then that confirms that that is a support resistance area, and if it's good indecision, if it's tradable, you can take that trade. See, that is the major change to my support resistance areas at the moment. I adjust them a lot more than I used to, and I'm placing them based on a lot less data, and I'm letting the future data determine if it's an accurate support resistance area and if they have to be adjusted or moved. It does take a little more management. Yep, definitely. It takes a little more management because you're doing it weekly instead of doing it once a month or once every 2 months, but it does lead to a lot more trades. It leads to a lot more accurate support resistance. And it really still isn't that much work. I mean, dedicating a few hours each week to updating your support resistance areas, you know, it's not that much work. Dynamic support resistance. Did you just come up with that name or are you in the advanced course? Klaus. That is so weird. That is what we call it in the advanced course. We call it dynamic support resistance. That is a literal name I came up with for this. So it's a pretty funny coincidence that you came up with the same one. But yeah, this is dynamic support resistance. We're just being a little more dynamic with our support resistance areas. We're moving them around and adjusting them to price. So they're tied in more with price action. You know what I mean? So this is a much better way to place your support resistance areas. It allows you to take more trades, and it's easier to place them. That's the other thing. It's easier. It takes more time because you have to update them more often, but it's easier. Now, I'm just going to throw up the outer lines around these. Now, I always get asked a lot of questions about these outer lines. You know, these ones here. People say, how wide do these lines have to be? Is it 10 pips to either side? Is it 15 pips to either side? The truth is, it does not matter at all. These lines, they exist simply as a visual cue that it is a support resistance area. A lot of people in the advanced course, they don't put the outer lines. They're happy with just having a single center line, and that's fine for them. Personally, I like having the outer lines. It just looks better for me. It looks like an actual support resistance area. But you can choose to do it however you want. If you want, you can put just the outer lines and remove the center line like this. You know, it's totally up to you. These outer lines, they just signify that it's a support resistance area. They are roughly 10 to 15 pips to either side, but it's not important, okay? By the way, guys, whenever I stop talking, it's because I'm reading the chat, so don't think I'm just my audio's cut out or anything. That is a good question, Costas. Do you care about wicks or the bodies of candles? Bodies are more important, but wicks are also significant. But I prefer to have the body of the candle forming on top of a support resistance area, like this one here, that there. That's more significant than just a wick. Let's fix that. Okay, let's quickly do some GBP AUD support resistance areas. Wait, how much time? Oh, we have 30 minutes. That's awesome. That's heaps of time. Okay. Yeah, don't buy indicators. It's pointless buying indicators. I mean, really, why do you need an indicator why do you need to pay for an indicator that places support resistance for you when you could just do it like this? And when you do it as, a sensible human being that can actually look at the data and figure it out, when you're doing it, when you're placing your support resistance areas, they're going to be a lot more accurate than support resistance areas you get placed by an indicator. Damn it. Oh, there we go. Maybe pull this one down a bit. I can't select it. There we go. This one's tough, this bottom one. This was in September, so this data is not that old. We could potentially place something there. Yeah, it's got a few bounces, so we could do that. Oh, that's 123 pips apart. Doesn't look like that much, but it's a fair bit. One here. I placed these yesterday on this chart, so I kind of remember pretty much exactly where they are. So I am cheating a little bit right now because I do know where the support resistance areas are. I don't think this was the best example for today's webinar, but that's cool because we're gonna do support resistance areas on some pair that you guys choose next. So that'll be fine. I'm reading the chat. Just saying that again, guys. That's why I've stopped talking. Yeah, the wicks are important, but I prefer to use support resistance areas. I prefer to I'll explain that in a sec, okay? If I don't answer that question in the next like 10 minutes, just remind me about that question. It's an important question, I agree, but we'll answer it. We'll answer it in a moment. Um, I just want to finish placing these support resistance areas. Now, again, as you see, these support resistance areas, there's really not that much to placing them. It's pretty straightforward. I placed them based on recent bounces, so you just have a look, bam, bounce there, bounce there, bounce there. Price got stuck as it came down here. See how it got stuck and then it kept moving down. It kept moving down. That is also something significant. So we got quite a few bounces. We got a bounce here. We got bounces through here. Got a bounce there. So that's this one covered. And we got indecision forming right on top of there on its way up. Just 3 candles ago. It never moved back down, but that's fine. It's clearly indecision forming on top of that support resistance area. This one here, this one here is hard to place. We might be able to place it up here. It's kind of messy a bit. I was thinking down here originally, but I'm going to pull it up into the center here, and I'll show you why. And I'll explain why bodies are more important soon. All right, so when you place the area lines around it, you kind of start to see a clearer picture of what's going on here. You see our price came up to here and then stalled, and these bodies formed along it. Those bodies forming along a support resistance area, they're significant too, because that indicates that price is struggling in this area. You've got a wick bounce there, you got a body bounce there. Again, this one is not extremely accurate. That's a pretty significant bounce in September though, this one here, but this one's not extremely accurate. But this is another one of those ones where we're not 100% sure, but we'll we'll see as price keeps moving through that area where the support resistance area is, and we'll confirm it with time. The cool thing is about the new way we do support resistance areas is you don't have to be incredibly accurate. You don't have to be very good at placing support resistance areas because you're placing them based on the bounces you see, the recent bounces. You're placing them based on those bounces. They're kind of obvious. You just see them by looking at your chart. Now, if they're accurate, then price is going to tell you that as it moves through those areas. If the support resistance areas are wrong, then you're going to clearly see that because price is going to be cutting through your support resistance areas and you won't see any trades forming on those support resistance areas. So you don't have to be extremely accurate, which is another benefit of doing support resistance in this way. Yep, zero, that's pretty much it. It's not an exact science, it's just support resistance areas. You're just placing them based on what you see, and then you perfect them with time. So yeah, we could clearly see this is a support resistance area, strong bounce there, blah blah blah. This one bounce there, and another bounce there. And this one we haven't got much data, but this is one of those ones where we'll just perfect it with time. We'll see what happens next time price moves down. I mean, you do have a bounce there, but overall you don't have that much data to go on with this one, to be honest. Lornet, that's a good question, but we'll probably hold that till tomorrow's webinar. Tomorrow's webinar is more about the trading side of things. Today I want to talk about just support resistance. So yeah, we'll cover that in tomorrow's webinar, what pairs I trade. Okay, so that's support resistance place for GBPUSD. Now, let's do something a little more challenging. Instead of placing support resistance on a pair that I've placed support resistance on recently, suggest a few pairs. Tell me a few pairs. No, not USDJPY. I don't like trading USDJPY. I haven't traded USDJPY in a long time. It's not a pair that I actively trade or I have any interest in trading. Therefore, I don't really want to do support resistance for it. EuroCAD? No, not that odd. I mean, a pair that I don't normally trade, but MAD USD? I don't even know what that is. A normal pair. New Zealand USD, that sounds good. EuroCAD. I think I've taken some trades on EuroCAD recently. EuroJPY, we already have support resistance for EuroJPY, so we can't do that one. Uh, Euro AUD sounds good too. GBP AUD. All right, let's open up. No, we just done GBP AUD. What am I talking about? All right, Euro CAD, Euro GBP, Euro AUD. Let's look at those, and we'll just pick one of those. Euro AUD. I can't see Euro CAD. Oh, there it is. And Euro GBP. Again, I can't see Euro GBP. Where is it? There it is. Okay. Someone said, ooh, there's two people saying GBP New Zealand, so let's look at GBP New Zealand too. New Zealand pairs suck for support resistance lately, though. New Zealand pairs have just been so messy and so hard to place support resistance on. But we could take a look at it. Is it even on this list? Oh, there it is. Okay. All right, AUD New Zealand. That's the last one I'm going to open. Okay. AUD New Zealand. I'll try to get through as many of these pairs as possible, but it's unlikely that I'm going to get through all of them today. What's going on here? All right, Euro AUD 8-hour chart. So I'm going to throw some support resistance areas on Euro AUD. We're going to start with this pair. Now, I'm going to try speed through these ones a little bit just so we could get it done quickly. But I will be answering questions along the way. You'll see how quick this process is now because I don't think I've placed support resistance on Euro AUD recently. So I don't really know where these are going, but I'm still placing them fairly quickly. Some pairs are more difficult than others, though. Some pairs will take you some time. It's not like every pair is going to be quick and easy. Hey. I'm not sure about this one down here. Just, oh, yeah, it's got a bounce there too. Right. Okay, that kind of confirms it. Yeah, this one's decent too. Wait, let's see what happens when we pull this one down to here. Nah. All right, this one I'm not sure about. This one we're going to have to confirm with time, but we're going to be able to confirm this one pretty soon because price is here right now. So we'll see what it does here and we'll confirm this one later in the coming days. Um, yeah, I do use, we'll talk about that in a second. Okay, so this is the support resistance area. These are the support resistance areas that I've put up on Euro AUD. So you see how fast that went. It wasn't a long process. You could do this very quickly. Now, like I said, you don't have to be incredibly accurate because as price moves through those areas, that's when they get confirmed. That's when these areas, that's when these areas are confirmed pretty much. I'll show you what I mean in a second. Okay, so for example, this one here is kind of confirmed by this indecision candle. Now, this indecision candle, it did not lead to a trade. We couldn't trade that one because price didn't drop down, but the fact that that indecision formed on top of this area kind of confirms that that's a support resistance area. If today we get indecision forming on top of here, that again is going to confirm that this is a support resistance area. We just have to see what happens. Maybe we'll get indecision forming on top of here and it will actually turn into a tradable trade and we could jump in short tonight. That is possible. We might see that happen. Now, if that happens, then that confirms the support resistance area. So with this method of placing support resistance areas, you could place them really quickly. You saw how quick that was. I'm placing it just based on recent bounces, and then we can confirm them as price pushes through those areas. Uh, I'm just reading the chart real quick. No, I don't really use my support resistance like that, Greg. Greg is saying, do you not use previous support as future resistance? Well, yeah, I do. But I think you're meaning something different. Previous support is future resistance. So when this area here is broken, for example, so this is currently resistance here. If price pushes through this area, right, this is going to become support. And then when price comes back down, I'll be using this as a support area. So previous support is resistance, definitely. But um, round numbers important? Yeah, somewhat. I mean, round numbers are psychological levels. If a support resistance area forms on a round number, it generally means it's a stronger support resistance area. It's more significant. Round numbers are psychological levels, and people tend to group their stop losses at round numbers. So you're going to find that round numbers, even if they're not the strongest support resistance, there is going to be some support resistance at a round number. Especially when taking trades, but this is something we're probably going to look at a little more tomorrow. When you're taking a trade, you're going to see a psychological level in the way sometimes, and price is going to get stuck at that psychological level. Psychological levels or rounded numbers are usually good spots to take out your first target. Um, your first target, you'll find a pretty good reason to take it out at a psychological level because that's where price is going to stall and it could very well turn around there. But we'll look more at that tomorrow. So yeah, Euro AUD, we play some support resistance areas. It was pretty straightforward, pretty quick. Let's look at Euro CAD. This pair looks a bit messier, so might be a bit more of a challenge. Uh, do I place it here? Do I place it there? Do I place it here? Where do I place this? I could also place it here. Who knows? Let's see how much space is between here and here. 50. This one's messy, but okay, I'm gonna give it a go anyway. Hmm. I want to place something down here. Oh, yeah, that lines up nicely. Never mind. See those two bounces there? Um, Remember, recent data is the most important. That is something you always have to remember. Recent data is the most important. So how far back is this? This is 2013. Yeah, I don't like going back that far. I don't like going back all the way to 2013. I mean, sometimes you're going to have to, like here, where price dropped all the way down, but yeah, I prefer not to. Um, yeah, okay. I'm not too sure about the support resistance area, but it does have, it has one bounce there. I think it makes more sense placing it up here, to be honest. Yeah, because it has some more data there. Uh, why are bodies more important? Let's go to... Let's finish up the support resistance areas for this pair. Now, as you see, this pair did take a little bit longer, and these support resistance areas may not be perfect. It is going to take longer sometimes. Some pairs are just messy, and usually messy pairs I just stay away from until they kind of clear up. I don't take trades from there. Um, you'll find messy pairs tend to give you quite risky trades. So they tend to be, it tends to be something you stay away from. So this is quite a messy pair. I play support resistance areas as best I can, but again, they are going to clear up with time. So with time, we'll be able to clear. Oops, how did I do that? I didn't even know you could do this. I just moved all the support resistance areas at once. I'm using the wrong key. Okay, I messed that up. Okay, let's fix this. Yeah, I know I had them all selected, but I didn't realize if you pressed Alt, you could move them all at once. I'm not really a big fan of MT5. I just use it for webinars mostly. I use a different charting platform for my main charting. Yeah, I use eSignal for my main charting platform. It's just the eSignal on webinars is it's kind of clunky and slow. And MT5 is a lot more fluid and it's a lot more easy to just throw up lines and it's a lot more easy to switch between charts. Like look at this, I could just switch between charts. If I'm using eSignal, it's like I click the switch button and then it takes a good 10 seconds for it to load. And it really slows down a webinar. So for webinars, I use MT5. But as my actual charting platform, I'm on eSignal. eSignal is a really, really nice charting platform. Someone was asking about the bodies of candles. The bodies of candles. Why do I prefer the bodies? Where is a recent trade I took? Here we go. Okay, so who, who was asking? It was Trade. You were asking, right? About why I use the bodies of candles to place my support resistance areas as opposed to wicks. All right, so were you around for yesterday's webinar? All right, so remember how in yesterday's webinar we talked about indecision and indecision forming on top of a support resistance area. So when I'm looking for an indecision candle, I want it to form on top of one of my support resistance areas, just like this here. That was a trade from yesterday, and that's a trade from last week. I want my support, my indecision to form on top of a support resistance area. All right, cool. So I want my indecision to form on top of a support resistance area. So if I go placing my support resistance areas based on the wicks, just the wicks of the candles, then my support resistance areas are going to be different. And what I'm likely going to get is in future, wicks are going to be bouncing from those support resistance areas because those are kind of like the extremes as opposed to the bodies. And I want the body to form on top of the support resistance area to take the trade because this is where the concentration of buyers and sellers is the strongest. So I place my support resistance areas based on the bodies because that is the signal I'm looking for to take a trade. I want the body of the candle to form on top of the support resistance area. Get where I'm coming from? Yeah, basically with support resistance areas, an area of support resistance is just an area of buyers and sellers. This is resistance at this time, so this is just an area full of sellers. Sellers are strongest along here. So I'm placing my support resistance area based on where sellers are strongest. That's where the bodies are. That's where the concentration of sellers are. You'll find that the wicks tend to be just extreme points, but you'll see with this one, for example, there's bodies through here, bodies through there, bodies through there. There's another reversal here. So the strongest concentration of buyers and sellers is along the band where all the bodies form. And that's where I want to enter my trade. I want to enter where they're strongest. I don't want to enter at the extremes up here because they're rarely hit and they're pretty random. So the wicks aren't as important to me. Yeah, yesterday's was recorded. All webinars are recorded and they're all going to be uploaded. Um, Wait, we done EuroCAD. Yeah, Euro GBP. So let's do this pair real quick. This pair looks a little messier too, but I think we could do this one quite easy. Someone in my blog asked for minor and proper major support resistance areas. Can we call them that way? Do they exist when you're placing them in the chart? Um, no. These are just major support resistance areas. These aren't minor support resistance areas. This pair... No, it's been here a few times. Never mind. This pair doesn't move that much, I don't think. Oh, okay. I could put it here, or I could put it here. I'm not sure. But again, that's the beauty of placing support resistance areas this way. If you're not sure, it doesn't matter because that's going to be cleared up as price moves back down to this area. And that's the toughest thing to get used to, really, not being sure, right? Because a lot of people think not being sure of where the support resistance area goes is a bad thing, and it means that you're not good at placing support resistance areas. But, you know, support resistance areas aren't always going to be extremely clear. Sometimes it's going to be a struggle to place them because the price action data is just messy. There was news that came out, blah, blah, blah. It could be anything. Sometimes it's not extremely easy to place support resistance areas. Sometimes you just have to place them and hope that they're right. And that's absolutely fine. If you do that, you just look for the most extreme bounces. You look for where you think the support resistance area belongs. And then price will prove you right or wrong. Price will move through that area and it'll prove you right or wrong with time. So don't be afraid to make mistakes with your support resistance areas. Don't think you need to go look for an indicator that's going to do it for you. Just go ahead and place them. Throw them on your chart. It's not a big issue if you get it wrong. Price is going to show you if the support resistance area is accurate because indecision is going to form on top of that support resistance area. And then you could take a trade there. So if indecision forms there, that's confirmation that this is a good support resistance area and I could take a trade there. Yeah, like here too. So price pushes back down this week, indecision forms there. Easy. That is a confirmed support resistance area. But what if, what if price comes down to here, right? And it doesn't form indecision there. No big deal. It doesn't have to form indecision every time it goes through. But then it comes through and it goes back through, no indecision, no hesitation at all. Okay, that kind of sucks, but we'll leave it. Comes back down, no indecision. Goes back up, no indecision. But then you start seeing bounces from these points here. So then you just adjust the support resistance areas. You pull one up, you pull one down, blah, blah, blah. You're adjusting it based on recent data, based on the most recent bounces. So it doesn't matter if you're wrong. The indecision that forms on that support resistance area is the confirmation. And if it doesn't form, you just move the support resistance area. Um, that's a good question. Andy's asking, what if you have a bunch of support resistance areas right next to each other? Would you add them all? Yeah, I mean, sometimes what happens is things just get really messy and the support resistance areas just stack up in one area. And, that is going to happen sometimes. You are going to get things like that happening. And then you just have to place your support resistance areas very close together, so much so that it's impossible to take a trade. But the thing is, you can't just say to yourself, well, there's too much support resistance here, so I'm just going to remove one of them. Let's just imagine, for example, there's support resistance. Ah, damn it, I'm using the wrong button again. I got a new keyboard today, so just say there's evidence that there's support resistance all the way through here. But then you look at these, and these are only 15 pips apart. Well, you can't take a trade in that area. That's just not possible. But you can't say to yourself, oh, wow, they're too close together. I'm just going to remove a bunch of these support resistance areas just because I don't feel like they should be there. I feel like they're too close together. And then you take a trade, but that trade's never going to go anywhere. So place support resistance areas where you see it. Place it where you see it. And if it's too close together, just avoid trading that pair. I mean, there's 50 pairs to trade. You know, it's fine if you're not going to trade 25 of them. Uh, we've used up the hour. We do support resistance on a few more pairs. I hate support resistance on New Zealand pairs right now, but that one's an obvious one. Look at that. How obvious is that support resistance area? That bounce there, that bounce there. Both extreme bounces. Easy stuff. Something like that. So you see, I literally placed those in what, 30 seconds? What was that? That I just done GBP New Zealand support resistance? 30, 40 seconds? Probably not even that, to be honest. It's a really quick process, especially when they're obvious. It's a really quick process. And you filter them out with time. So this isn't time consuming. Updating them each week is more time consuming than placing them originally. Yeah. You do you include all support resistance areas from all higher time frames and encompass them into the time frame you trade? That's a good question. Recently with daily charts, I've been placing different support resistance areas. I have an example. Yeah, I do. My support resistance areas are slightly different on the daily than they are on the 8 hour, for example, for Euro USD. This is simply because on the daily, some of the smaller support resistance areas on Euro USD, you don't need them because they're just not as significant on the larger time frames. So when you start getting up to daily, you may want to place different support resistance areas. Greg, all the webinars will be uploaded together. They'll all be uploaded at the same time, so you won't see it until tomorrow, to be honest. No, I don't do monthly support resistance areas. That is a good question, but yeah, I don't do monthly support resistance. No, that's a good question. Mark is saying I want to trade 4 hour. Does 4 hour have its own support resistance? Basically, anything between 4 hour and 12 hour, I tend to use the same support resistance. Daily is different support resistance, but, and this is going to be confusing for no good reason, sometimes the 12 hour on the daily, I will use the same support resistance. Just think of the 12 hour as kind of a hybrid pair. It sits between the 8 hour and the daily. Sometimes on the 12 hour, I'll use the 8 hour support resistance areas, 8 hour, 6 hour, 4 hour. Sometimes I'll use the daily support resistance areas. It just depends where the trade forms and how good the trade looks. It's kind of a hybrid. But generally, yeah, 4 hour charts through to 12 hour charts, I'm using the same support resistance. Daily, I'll use different support resistance depending on the pair. Do you need those pivot calculator tools? Nope. I do not use pivot points. I just use my support resistance areas. They work fine for me. I mean, I know some people use pivot points. I've got nothing against pivot points. I just don't personally need them. My support resistance areas, that's all I really need for my trading. But as I always say, and this is something that a lot of people are uncomfortable with. When I teach people my trading strategy, I say you don't have to copy me exactly. Just because I do it this way doesn't mean you have to do it that way. Just take the basics of what I'm showing you, take the basics of what I'm teaching you, and adopt it into your own strategy. And you use it how you feel is best. So if you like my support resistance areas, you like the way I look at candles, you like the way I trade, but you feel that pivot points would help you, use them. There's nothing wrong with that. If you use them for a month and you feel like they're just getting in the way, remove them. There's nothing wrong with like experimenting and figuring out what works best for you. I mean, there's some people in the advanced course who use indicators still. I mean, they used indicators before they came to the advanced course. I say to them, I don't use indicators, but they have just gotten so used to using like a stochastics or an MACD, for example, that they continue using it. Yeah, fibs. Um, People love Fibonacci. People in the advanced course, they still use Fibonacci. I don't use it personally, but they feel like they want to use it, and that's fine. I mean, it's just up to you how you decide to trade in the end. You shouldn't copy me exactly. You should do what you're comfortable with. If you find Fibonacci, pivot points, whatever is useful, use it. Um, when I realized I needed to change my support resistance areas, was it because I was making losses from the previous support resistance areas? No. It's not really because I'm making losses from previous support resistance areas. I just update areas based on the most recent data. So the most recent bounces I see, I just update my support resistance areas to fit in with those bounces. So, I'm looking at my chart. Like I was saying, I gave an example of this already. If I see price consistently breaking through a support resistance area, and it has it's not showing any respect for that support resistance area, it's not acting as if that support resistance area matters, then it becomes clear that that is not really a support resistance area and that that support resistance area has to be moved up or down. So you just look at the recent data, you look at what price is doing, and if price is cutting through a support resistance area, you update your support resistance areas. Trade is asking, what about news? News is important, but that is something we can discuss tomorrow because today was mostly about support resistance areas. I know we got a little off track, but I don't want to talk about the trading side of things. That's something we'll cover in tomorrow's webinar. But okay, that is a support resistance related question though. Trade is asking, during news, does price still respect support resistance? That's a good question. I mean, during news, you'll tend to find that price is more likely to break through a support resistance area. But also, on the other side of that, you'll tend to find a lot of the times when there's a move caused by news, it'll tend to end on top of one of the support resistance areas. So it will tend to stall right here, and then indecision will form, and then the reversal will come. A lot of my trades, they come right after, well, not right after, but a few hours after a news release because the news release will push price into one of my support resistance areas. Price will stall at my support resistance area. You'll get indecision forming, then I can take the reversal. That does happen quite a bit. Sorry, guys, I think I'm getting a cold, by the way. Um, okay. Why not USDJPY? It's just a personal preference. I don't really like the pair. I never have. I've been trading for years, and I've probably taken maybe I don't know 10 trades on USDJPY in my entire trading career. And keep in mind, I've been trading Forex since I was 18. So, you know, I'm 20. Wait, what? How old am I? 20. I was born in 1986. I think that makes me 29, right? Or was I 28? God, this is embarrassing. I think I'm 28. All right, I'm 28. Okay. So yeah, I've been trading I've been trading 10 years, which means I've taken one trade per year on USDJPY on average. It's just not a pair I like to trade. I mean, some people in the advanced course trade USDJPY, but where is it? It's just not a pair I like to trade. It just isn't. It doesn't move enough. I mean, this is the largest candle we've seen on this pair in in quite a while. Okay. That actually is a pretty big candle. What? All right, I stand corrected. It does move a little bit, but that is not normal. That is not normal. This is normal on USDJPY. This 25 pips in a day. You know, 20, yeah, that's another 25 pips. 33 pips in a day. That's what you normally get on USDJPY. But to be fair, in the last few weeks, it has been moving quite a bit. Maybe I should open this pair more often. Look at that candle, 300 pips. That's crazy. But overall, this is just a slow moving pair. It just is. There are some large candles here, but for the most part, this pair is extremely slow moving. Uh, yeah, that's the other point. There's no look at the support resistance. Last time, this is a monthly chart. Last time price was here on USDJPY, because someone asked me to do USDJPY support resistance, was 2007. How could we possibly place good support resistance on this pair? You'd have to go back to 2007. It just doesn't work. I mean, yeah, when price keeps moving through this area on USDJPY, when it keeps moving through this area for a while, then we'll be able to place support resistance. But even on the 8-hour chart, it's been moving pretty much consistently up until here. You can't really place support resistance. So that's another problem with USDJPY right now. We just don't have support resistance for it. I hope I don't get sick for tomorrow. I think I've got a pretty bad cold. Don't worry, I'll do the webinar even if I'm sick. I've done webinars before with a cold because I feel bad letting people down and not doing them. So even if I'm sick, we'll do the webinar. No, it's definitely it's not about not all pairs will work with support resistance. All pairs work with support resistance. It's just some pairs, when they're moving into areas that they haven't been in for a long time, like we see with USDJPY, it's just support resistance isn't going to be very clear, so you can't place it. You just have to wait for it to clear up. So if we wait like a week, for example, maybe 2 weeks, then price will be cutting through this area more and more. It'll be moving up and down, it'll be moving around this area, and then we'll start to get a clearer picture of where the support resistance is. But until then, we don't really know where it is, so you're kind of trading blind. You could start to kind of figure it out. I mean, if I had to place support resistance, I'd probably say, yeah, around about up here-ish, there is something, or maybe even, no, there. That's probably a good support resistance area. But we need price to actually move through this area to confirm it. You can't just place it based on just that and then start taking trades from there. It's just tough on pairs that are moving into, you know, uncharted territory or territory that has not been seen for 7, 8, 9, 10 years. Euro JPY, good question. Where is it? Why is Euro JPY better? I wouldn't really say Euro JPY is better, but we just have a little bit more data on Euro JPY. It's just a bit clearer where the support resistance is at this time. And also Euro JPY, I believe, and I could be wrong. No, it's 2008. Never mind. I think I was thinking of another pair. But with Euro JPY, we do have a clearer picture of the support resistance for this pair. But with Euro JPY right now, the support resistance areas, they're placed based on very, very little data. And I'm not 100% sure about these support resistance areas. It's much like USDJPY. These are kind of fresh and untested support resistance areas. So we'll just have to see how they go. There are going to be pairs like that at all times, pairs where price is moving into an area it hasn't seen for a long time, so the support resistance areas cannot be that good, and it's a little bit riskier taking those trades. But like I said earlier, there's like 50, 60 pairs. Who cares if you can't trade EuroJPY and USDJPY? You can still trade USD CAD, AUD USD, Euro USD, GBP USD, GBP AUD, Euro AUD, Euro CAD, Euro GBP, GBP New Zealand. You know what I'm saying? There's so many pairs, it doesn't really matter if you say for 1 month, let's not trade USDJPY, support resistance isn't clear. Yeah, could you submit a question to me via email about support resistance? I'm not gonna say no, but I tend not to open emails with attachments a lot of times. It'd be easier if you post it to the blog or Skype. You could just Skype me. Skype would be so much easier. Just send me an image on Skype. That's my Skype name there. Andy, as for a newbie, is it best to stick to just one pair? I used to say yes, but with the way the market is moving these days, no way. I used to say stick to one pair a long time ago when price was moving like crazy. But these days, price just isn't moving fast enough to stick with one pair. It just isn't. If you're sticking with one pair, it's just not enough. No, you're going to get like one trade every 2 weeks. It's not going to be enough. There's a lot of questions about how I trade. We'll cover that in tomorrow's webinar. This webinar was about support resistance. We'll cover how I trade in tomorrow's webinar. Yeah, all these questions, guys, all these questions will be covered tomorrow. These are all questions about how I trade. All of these will be covered tomorrow. I think I'm going to wrap up this webinar because we're already 20 minutes over. So I'm going to call an end to this webinar. I think I've covered support resistance in a lot of detail. I'll be sharing a link to my support resistance areas. Here it is. I'll be uploading this webinar in sometime tomorrow. So after tomorrow's webinar, I'll be uploading all 3 webinars. So thank you guys for attending. Like I said, I'm going to call this webinar to an end, but I will see you in tomorrow's webinar.